My friends, what's going on? Welcome back to the channel. Before we jump into the video, you guys know the deal. Nothing I'm giving you is financial advice. Everything I'm giving you is for educational purposes only, so that way you can start making wiser and better decisions for yourself, your family, and your portfolio. I don't want you to be a bag holder. I want you to do well in the market, and that is the whole purpose of my Twitter, of my channel, of everything that I do. And I hope it's helpful to you. If you are new to the channel, thank you. I appreciate you. If you're an OG to the channel, then also thank you. I appreciate you. It doesn't go unnoticed. Please follow me on Twitter, Colin_Gladman. Easiest way to keep up with everything that is going to be going on. Having said that, let's jump into the video. I apologize for the late video. Was having to deal with some Discord stuff, and that is my priority first, and so was taking care of that, and then now we can jump into the video. So first thing, let's talk about, let's look at GameStop right here. So GameStop had a great day. Pretty much everything was doing pretty well in the market today, especially meme stock related, up until that knife that happened right around like 1 or 2 o'clock in the afternoon. I forget exactly what time it was, but it was pretty much just a market-wide knife that just pulled everything down. Pulled SPY down, AMC, GME, I mean, just everything. So I was actually talking with my Discord about this. They were getting a little concerned about GME. They were like, oh, it's just doing nothing. It looks like it's about to fall. And you can ask anybody in there this morning. I was like, I don't know, guys, man. This thing is consolidating out here outside of its long-term bear trend. And, I mean, that is very bullish as far as I'm concerned. And then sure enough, today it started out slow, but then we got a real nice pop throughout the day. And what is awesome about this pop is look at the volume increase right here. So yesterday you kind of got that 50-50 candle, then you got a big old bullish engulfing candle, and you got increasing volume. So I'm anticipating a lot of good things out of GME. Once again, going back to the Bed Bath & Beyond, a rising meme lifts all boats, if you will. So I'm not surprised due to the fact of Ryan Cohen being intermingled in both of these stocks and companies that you're starting to see some similar movements out of that. So if you will, you could look at it as Bed Bath & Beyond was sort of leading the way, and now GameStop and AMC might be catching up to it. I don't know. We'll see. So let's go over here into AMC. So what I'm looking at for AMC, as I posted about this, you pretty much have a bullish pennant that is going on. So essentially, we're making some lower highs and we're making some higher lows. This typically, now once again, we all have a little PTSD from this shape when it comes to AMC, but typically what you're going to do is you're going to be breaking out in the same direction that you went into the pattern. So this is kind of a continuation pattern. So you have big push up, you have consolidation within the pattern, and then you have another big push up. Now I was talking with Dave and some of the other guys. He was kind of looking at this as more of like an ascending triangle, which is also a very bullish pattern as well. And what you've got going on in here is, even if I go down here to like the 5-minute, is we've essentially got a trend within a trend, so to speak. So we've got our uptrend that's really been going on since back here. We had kind of this spring, if you will, on August the 10th, came back up, rolled back over, tested the trend, and now it's been tested several times, just like the top one has. But now we've kind of got an ascending trend right here that is kind of making an ascending triangle. So what I would anticipate is going to be definitely a push back up towards the top of this trend, then maybe come back down, and hopefully we just kind of move around in that till we get out. And we could do that by tomorrow. We could see a breakout of this top trend, which definitely want to see us starting to make higher highs than that 2750 that we made. So the lower highs is great. The higher lows is great. The lower highs is great as far as everything compression goes, but we do want to see a burst to the upside and not to the downside. Obviously AMC's got a big week coming up here with all the ape stuff that is going to be going on. Real quick, guys, my opinions on ape as far as what am I going to be doing. I will be holding 0 options. Let me say that again. I will be holding 0 options into this Friday on AMC. I've already trimmed out, if you watched my video from yesterday, I trimmed out calls this morning that I bought yesterday, but I trimmed some at 25, I trimmed some at 26, and I'll pretty much be trimming those all the way out, and I got stop losses set at pretty much a break even as far as the remaining calls go. Took profits on, I did 50 contracts total, took profits on 20 of the contracts at 25 and 26, and then I have 30 contracts still waiting to see how they go. They are in the stock god's hands at that point in time. So if meme's still looking good, I expect AMC to continue, obviously, to still look good. Let's kind of see what our RSI is looking like. So RSI on the 5-minute looks good. AMC RSI, if you will, on bounced right here, pretty much right around the 50, which is definitely what you want to see. Hourly, yep, bouncing good. 4-hour, still got room to run. Daily, see what daily's doing. So kind of bouncing right here at the top again. So daily still has room to run. And once again, when it comes to RSI, guys, it's not a magical indicator or anything like that. It can always get more overbought. It can always get more oversold. However, there are certain ranges that you start looking at where you just go, okay, it's just not going to get much higher than this. I mean, once again, look at the January and the June run. Once the daily RSI hit about 94 on both squeezes, runs, gamma squeezes, I don't care what you want to call it. Once it hit at 94, both times, that's not an accident as far as I'm concerned, but once it hit 94 both times, then that's when you had, some big drop-offs at that point in time. So if we were, squeezing or anything like that, you stick at about 22 points on the RSI. So there's still plenty of room for it to run. So basically what I'm looking for is some continuation here. I'd like for this little mini uptrend to essentially hold, and we just kind of bounce around here and push up. If not, then we would be doing one of these. If that trend were to break, then we'd kind of be looking at that. So it just might delay it a little bit, but no big deal as far as I'm concerned. It's just kind of a trend within a trend, so to speak. If I pull up, so I talked about here how we had the 1348 EMA on the 15. We had a cross up here, and look at this. We had a cross up, and then we immediately had a cross down, and then we had another cross back up. So that is still looking good. If we go to the 921, that one, we got the cross up, and it still looks good. Yep, doesn't look like it's going to cross down anytime soon. Guys, I highly recommend, start using the VWAP as well. And you can see here, anytime we're above the VWAP, it's going to be more bullish. Anytime we're below it, it's going to be more bearish. And you can see a lot of support and resistance with it. But we actually closed above the VWAP today on the 15-minute. So that looks good. Let's go hourly here. So, look at this. It closed literally right at the VWAP on the hourly. We did get a cross down on the hourly, but then we've gotten a cross up on the hourly 921. This looking candle wise here. So nice recovery here, because that was definitely a bearish engulfing candle on the hourly, but then got a nice bull stepped right back in. Let's go to 4-hour. All right, so that 4-hour candle is not great looking. I'm not gonna lie. That leads me to believe we might actually come out here and drop just a little bit in the morning, and then before we start pushing back up. But once again, no guaranteed. You can see a similar candle here. Wick wasn't quite as long at the top, and you gapped up and pushed out before you saw some retracement. So you could see that too. We could see a gap up before retracement, but nothing too alarming. It's not, as far as I'm concerned, that's a very 50-50 candle look. And then another average medium, if you will. Just kind of a 50-50 looking candle on the, it's a bullish candle, but it's not super bullish. And so definitely be looking for some continuation. So nothing to sweat there. Last but not least, though, if we do, start getting some pushes or anything like that, I've got this line here at 38.85. So everybody always freaks out about gap fills to the downside. If we really start to get a push, a run, we push out of this and we start running, one of my targets is going to be right here. So we've got a gap at 38.95. Let me get rid of this so you guys can see it better. But we've got a gap up here at the top that was never filled. So you can see right here, this was the last hourly close on November the 24th. And then we gapped down, so that would have been a Friday. And then we gapped down that following Monday, never came back up and closed this gap. Let me put it right on the close. So, yeah, 38.88. Is that where we closed at? No, that's saying closed 38.93. Yeah, there we go. Yeah, because it's a bullish candle. Sorry, shouldn't have changed my candle colors, right? So we've got a gap from this one, got as high as, we'll just put another little one right there. Boom. So we basically got this gap from 38.41 to 38.93. So basically a 50-cent gap, 52 cent to be precise, gap towards the upside. So if it really starts running, you could really start running. Okay. I wonder if that's even like a fib extension. Let's see. I've always said when it comes to gaps, I always kind of view them as like markers or return points at some point in time. Could be months down the road, could be years down the road, who knows? So not quite the 2.618, but pretty close. Unsurprising that it would be right in there. Nice. I like it. So that's going to sum up the video. So we're in this little pennant right here. We've got a trend within a trend. So yellow line, would love to see, even if we come out of the gates a little flat, but I actually think, let me look at my phone here real quick. I think we pushed up a little bit in after hours, I think is what I saw. So, we could, a little bit, 0.73%. So, going back to that 4-hour look right here, we could have a similar result. So kind of got a long wick at the bottom, and then it gapped up and it ran pretty hard before pushing back down. So something like that. That would have been, was that right over in here? I don't know. Doesn't matter. So we could get it. We could see a similar result. Like I said, the biggest thing that I'm looking for is a push past that 2750. Let's start making some higher highs. And so, even if it came out of the gate tomorrow, shot up pretty good, and then is going to come back and it's going to test the top of this range, and then so something like that makes a whole lot of sense to me too. If things really started running hot like they do for or did for Bed Bath & Beyond, GameStop pretty much shot straight up today at one point. So there can only be so much pressure built up before they got to start letting some of it out. And so especially if the overall market, doesn't completely crash or anything along those lines, I think we could still see some nice continuation. That is certainly what I'm looking for, is continuation. My gut tells me we could still see some higher highs this week. That's certainly what I'm hoping for before, obviously, APE is going to be released on Friday. But your shares will be in your account August the 22nd is when you will actually see the split, if you will, happen. All right? So that's what I'm going to be looking for. So I still think, these price targets I was talking about yesterday, still think they're going to be very valid. So that 786 is going to be something that we're looking for. Did I measure from here? Because I would have been. Yeah. Look at that. I mean. To the top. I said, you wonder why I call out the numbers that I do? It's not because I'm some TA genius or anything like that. It's because it's what the old fibs tell me. Learn your fibs, know your fibs. That's all I got for you today, my friends. Looking for continuation. Definitely want to see some higher highs is the main thing. Whether we gap up or retrace tomorrow, not a big deal to me either way. So once again, we'll be watching the trend within the trend. If not, watching the overall bullish pennant bounce around, ping-ponging in there before we get a break, hopefully, to the upside. Once again, if the video was helpful to you, please like and subscribe, yada, 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 yada. Follow me on Twitter, all that good stuff. Not financial advice. Take profits. Options can go to zero. You can always reposition. You cannot always get your money back. Please do not be dumb. Some of you guys have messed up the January run. You messed up the June run. You messed up the March run. I've had message after message after message of people literally losing hundreds of thousands and millions of dollars, all because you're not willing to take profit on your freaking options. Please learn from your mistakes. The definition of insanity is doing the same thing over and over and over again, expecting a different result. Quit messing up the runs. These are high volatile stocks that are going to go on runs. Please stop messing up the runs. Don't mess up January anymore. Don't mess up June. Don't mess up March. And don't mess up right now. If you are making money, especially on your options, okay, I implore you to take profits. You can always get back in. If that money, if a rug pull happens, we were up here at 26 earlier today. I was glad I took some profits at 26 because bam, we just got rugged right after that. Super fast knife. Okay? And like a span of 30 minutes, we went from 26 all the way back down to like 23 something. Yeah, literally went to 24. Okay? So we went from the high of like 26.17 to 24.15. A $2 swing. Like that. You know what that does to options, especially if you were playing weeklies like me? Now, if you were playing way further out, I'm not necessarily talking to you, but if you were doing like a weekly like me, that's a ton of money. That's why I took profits at 25. That's why I took profits at 26. Take profits. Stop making the same mistake over and over and over again and expecting a different result. Your greed is blinding you, and you have to quit doing that. That's what the market makers want. They want you to be greedy and diamond hand those things, and then they expire worthless. And I just want to help you. At the end of the day, that's all I want to do for anybody, is I just want to help you make better decisions. Apologize for the rant at the end of the video. Have a great day, my friends. I'll see you in hours.